Hello everyone, welcome to session 9. In today's session, I will be discussing a problem on dissolution of firm when all partners except one become insolvent. I mean to say, all the partners of the firm become insolvent except one person. So I've taken a 15 marks exercise. So I'll read out the problem for you. So X, Y and Z were partners in a firm sharing profits and losses in the ratio of 2:3:5. The following was their balance sheet as on 31/12/2020 when they decided to dissolve the firm. The liabilities, we have capital accounts of all the three partners. We have a bank loan followed by creditors, and we have assets, cash, debtors, machinery, profit and loss account, and advance to X. That is advance given to partner. Further, the assets realized, I mean to say all the assets have realized 40,000 rupees. X has a private estate which is valued at rupees 10,000. Y's private estate is not sufficient even to pay his private debts. And point number 4, from Z's estate, a dividend of 50 paisa in a rupee is recovered. So they are asking us to prepare the necessary accounts to close the books of the firm. In this case, how to prepare the books of the firm? So I'll show you. As usual, begin your solution with preparation of realization account. The same manner, transfer the assets at their book value. That is, we have debtors and machinery. Transfer them at their book value. In the same manner, on the credit side, transfer the liabilities at their book value. So we have creditors and bank loan. So after transferring these assets and liabilities, the next entry should be passed on the credit side for the assets sold. So they have given in the adjustment the assets realized rupees 40,000. So hence on the credit side, by cash account as 40,000, and as usual we need to make payment to outsiders. So hence the entry on the debit side as to cash, that is creditors and bank loan paid off. So total put together 50,000 we have brought. So no realization expenses given. Hence you need to make a total. If you look at the outset, the debit side total is more, so it's coming nearly 1 lakh. Keep the same total on the credit side, 1 lakh, and deduct the credit side items. That is creditors, bank loan and assets realized. The difference what we are getting is 10,000. So this is what is loss on realization. So this loss on realization should be transferred to partners capital account, that is to all partners capital account. So if you divide this realization loss to all the three partners in their profit sharing ratio, so X will get 2,000, Y 3,000 and Z 5,000. After this, prepare all partners capital account. So in this problem, in the previous problem, they have clearly mentioned that who has become insolvent. So based on that, we used to prepare insolvent account and then followed by solvent partners capital account. But in this problem, nothing is stated. So what can be recovered from their private estate is been given. So I'll show you how to prepare this account. So in usual manner, prepare all partners capital account. So that is X, Y, Z. So begin with their credit balance. So by balance brought down. So X 6,000, Y 8,000, Z 10,000. After this, if there are any accumulated profits or losses in the balance sheet, transfer them. So we have accumulated loss on the asset side, that is P&L account. So we have 16,000. So 16,000 into 2 by 10 for X, 3 by 10 for Y, and 5 by 10 for Z. After doing this, you need to transfer the realization loss given. So just now we prepared realization account. So realization loss to be transferred. That is 2,000, 3,000, 5,000. After this, in the adjustment, after doing this, now no other entry to be passed. After this, just at the outset, take the total. I'll tell you, if you take the total of X, that is 3,200 and 2,000, it is coming nearly 5,200 on the debit side. On the credit side, we have 6,000. So credit side is more. Fine. Then take a total of Y. So it is on the debit side, we have 4,800 and 3,000. It is 7,800. But wherein the credit total we have is 8,000. So here also, in this case also, the credit side total is more. Now, if you look at the Z's account, on the debit side we have 8,000 plus 5,000. 13,000 is the total, but on the credit side we have only 10,000. So among the three partners, only Z's capital account is showing the debit balance. So now take the total of only Z column, that is 13,000. So keep the same total on the credit side, that is 13,000, and deduct 10,000. After deducting, remember, so they are telling, we can see what is the capital deficiency we got? We got 3,000 rupees. But in the adjustment they are telling, so Z is able to bring in 50 paisa in a rupee, that is nothing but out of the capital deficiency of 3,000, so Z is able to bring 50 paisa in every 1 rupee. So hence, out of 3,000, if you multiply by 0.5, that is 50 paisa per rupee. So the cash brought in by Z will come down to 1,500. After doing this, now we will come to know the exact capital deficiency. As he brought 1,500 in the form of cash, now the remaining amount is another 1,500. Friends, remember, in case one partner become insolvent and two partners are solvent, then the capital deficiency of an insolvent should be borne by solvent partners. So in this situation, as just now we compared the capital balances of X, Y, Z. At the outset, it is looking Z is insolvent. Hence, this 1,500 rupees should be borne by X and Y in their then standing capital ratio. So for this purpose, we need to make a small note, that is calculation of capital ratio. That is, what for this one? This one is for the capital deficiency of Z to be shared by X and Y. So as usual, we have already know that we need to begin with the capital balances of X and Y. If there are any accumulated profits, reserves, we need to add them. And in the problem, we have provided with accumulated loss. So now the share of loss of X and Y, if you minus them, so you are going to get 2,800 and 3,200. Hence, the ratio will come down to 7:8. So 4 7 ja, 4 8 ja. So we will come to know the ratio. We'll get the ratio of 7:8. See here that 1,500 I have divided among X and Y in the ratio of 7:8. So 1,500 into 7 parts should be borne by X, and out of 15 parts, 8 parts should be borne by Y. And remember, after passing this entry, now we need to transfer. So as these entries have been made on the credit side of Z's capital, so they appear on the debit side of X and Y. So the same 700, 800 is been brought to the capital accounts of X and Y. That is 700 and 800. So after this, again, now look at the totals. So now, if you look at the totals, so this side, so if you compare X capital, so we are getting again the debit balance, again debit balance lesser compared to credit one. But if you look at Y's total on the debit side, now this time it is 600 more. So hence, take the total of the debit side of Y, keep the same total on the credit side, that is 8,600. If you deduct the debit side total of 8,000, a difference of 600. And let me tell you, in this case, we have already closed the capital account of Z, and now while closing the capital account of Y, so we got again the capital deficiency. Then who is remaining? We have only one partner who is a solvent, that is X. Hence, this capital deficiency of Y must and should be borne by only one person, that is Mr. X. So hence, I have written here by X capital account 600. Now if you take a total, the total of Y's capital account on the debit side as well as on the credit side will get tallied by 8,600 and 8,600. So now this entry is on the credit side of Y's capital. The same entry should be brought on the debit side of X capital account. So the same 600 is being transferred. Now if you take the total, in this situation X capital account on the debit side is showing more. So now take it on the debit side total 6,500, keep the same total on the credit side 6,500, and the difference we need to write it as by cash. Why not in case of Y as by cash when we got a deficiency? It's because I'll show you. Please make a note of point number 3. Point number 3 says that Y's estate, private estate is not sufficient even to pay his private debts. Is nothing but Y is not in a position to bring anything in return. So hence, in Y's capital account, we have shown it as capital deficiency and transferred to X account. But why in case of X as by cash? Because look at the adjustment 2. They say that X has a private estate which is valued 10,000. So Mr. X has his private estate. From his private estate, he is able to bring in the capital deficiency of 500 rupees. Hence, we have written on the credit side as by cash. Hope you understood. So after doing this one, at the end, we need to prepare a small cash account. So I have written here an important note. So please keep this in your mind. The capital deficiency of Y should be borne by solvent partner is nothing but X only. Here the rule of Garner versus Murray is not applicable. Remember, Garner versus Murray rule is not applicable because in order to apply the rule of Garner and Murray, the name itself says that there must be minimum or at least 2 solvent partners. In our problem, in this situation, Y and Z, 2 have become insolvent and we have only one partner as solvent. Hence, no question of application of Garner versus Murray arises. So after this, we need to prepare a cash account. So as usual, begin with two balance brought down, that is our cash balance, that is 2000. Then on the credit, next duty is go through the previous accounts. Wherever you have the cash on the debit side, transfer them on credit side. So look at, we have only one entry on the credit side. So this is for the liabilities paid. This entry you are going to find on the top, that is realization account, debit side. On the debit side, I have written to realization account. So this is for the assets realized. So this entry you're gonna find it on the credit side of realization account. After that, we have written advanced X. So X, the firm has advanced an amount to X. Now the X has a private estate of worth rupees 10,000. Out of 10,000 we can recover 6,000. Hence the advance given to X is been recovered. Hence the entry is cash account debited to advance to X 6,000, and followed by adjustment. They said that we can recover 50 paisa in a rupee can be recovered from Z's private estate. So this entry is made on the credit side of Z's, that is partner's capital account in the Z's capital column, and at the end the capital deficiency of X, he has brought in a cash worth rupees 500. So those entries have been entered. So after this, if you take a total, the total is 50,000 and 50,000. So I have quoted the reference. In case if you have any doubts, so please do go through, and in the description I have provided my email ID. You can post your question there. I'm gonna reply you. So thank you.